Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about Robinhood. Can this stock hit $100 a share? And what is some good support resistance to actually buy this stock, swing trade it, or what is a good long-term strategy for Robinhood? And I'll give you guys my honest opinion of that. So over the past couple of days, we've had a ton of things happen with Robinhood. The very first thing is they did announce their IPO, their internal public offering. So for those of you that don't know what that is pretty much just allowing the public to actually buy shares of Robinhood. And yes, it is a great stock. It's a good company and everything like that. But here's the thing. Since their IPO, which was last week, this stock is up already well over 47% in value, which is absolutely crazy. And at one time it hit $85, which was up 127%. So for me, this is what I classify an IPO breakout. This is why a lot of people love IPOs and a lot of people hate IPOs, is for this reason, okay? Is because IPOs in general get a lot more volatility. So a lot of people like to always say, well, Carter, this thing squeezed up 127%. But on the flip side, there is more IPOs that actually go the other way. So instead of being up 127%, you're actually down. So if you are a beginner investor, beginner trader, my lesson to you guys is either learn to paper trade IPOs. The second thing is just stay away from them for about a week or 2 weeks. You know, I would just now start looking at Robinhood. The reason why is because a lot of this volatility is going to start to dwindle down, and there could be some long potential and some short potential. So will Robinhood hit $100 a share? So the idea of that is just because we've seen it hit 85. Will it continue to rally up? So right now, with it being 55, for it to go up to 100, that's going to be a pretty high return of about 79% in value. And realistically, yes, it could hit $100, right? We've seen it hit 85. It probably just needed a little more buying pressure before we had that squeeze again. So could it hit $100? Absolutely. But before then, it could hit $40 or even $30 a share just because of the volatility swings. So for me, I think a good solid strategy would be just to buy in between $38 and $30 a share. If you guys can pick up shares in between there, and it might take a little bit of time before we get some sell-off back in it, but at least then you'll know you're buying on a support line, just because you guys can see all the buying pressure we've seen in here. And if it just does continuing to start to slowly move its way up, then a good strategy would be dollar cost averaging, so you guys can get a good average share price. Dollar cost averaging for me works extremely well for more long-term stock. So Robinhood, in my opinion, carries a ton of long-term potential. And if you guys agree, I think a good strategy would be that dollar cost averaging, so you don't have to worry about the volatility, and you could use it to your advantage of getting that share on a good price, right? So breaking down some basic support, basic resistance here, we will actually change the time frame, and we will go to the 20-minute like that, so we can get everything a little more in tune. So one thing you guys can see as we kind of zoomed in a little bit is it does have a tendency to use this 200 moving average line as some overall support, which is a pretty good thing. So you know that at least if it goes down to 53, there could be some buying pressure in there. But breaking down some support and resistance, you guys can see it does have some pretty hard resistance here at around 71, right? You guys can see this huge wick in here. That was just a lot of selling pressure. You guys can see, because if it was buying, we would see this huge gap right in here, just like how it is in there. But with it being wicks, anytime it's above the 70 and a lot of sell-off in that zone, the major resistance would be around 71. Support, on the other hand, it does look like we do have some here at around $50, which is kind of expected that hundreds and 50s act as very strong support and resistance. So it's very common that actually $50 is a good support for this. So now, just by looking at that, there could be a possible swing trade if it dips down to 50, from 50 to at least 71, but that volatility would be very, very high. That would be a very higher risk outlook for that. Breaking it down in here, it does have some support here at 33, more resistance here at around 38. So that is the basic support, basic resistance on that, and you guys can see it a little more clearer like that, where you guys can see sell off there, buying pressure there, sell off here until we had that breakout. So guys, Robinhood for me is an absolute buy, but you just have to be cautious with it. Set your stops early, or just wait or dollar cost average it. If you're a new investor, I would just recommend staying away from it or paper trading it, because the volatility swings are going to be very, very high. So that is it. I hope you guys enjoyed it, and overall, I hope you guys got something of value, and we will see you guys later. Don't forget to check out my course, and we'll see you later. Take care. Remember to stay happy, stay positive, stay safe out there. Take care.